Good morning. Good morning. Hope everybody's doing well. AZZ, AIAZZ. Yes, but no, because obviously plus gex and negative gex for in most cases are going to be significantly wide. So that's probably going to be too wide for an IC or what you're wanting to put on. We have a few other tools in the Discord, mainly our rate of change chart, and we like to see that flatten. And when that rate of change chart starts flattening, telling us that the call and put centroids are starting to stabilize and flatten, that gives us a better opportunity to put ICs on. And that gives us a better opportunity with levels. And usually that's in after 11:30 noon into that hour, we'll start to see the ROCs flatten from a trending day. If we're going to keep trending, or if the ROC starts to flatten, then it'll be a little bit more of a consolidation. And that's obviously when you want to place IC trades. If we're, extreme trend up or extreme trend down, ICs are not the play that you want. So that's why we'd like to wait until we see the rate of change and our centroids start to flatten out, and that gives us a better opportunity to place those trades. So hopefully that answers your question. And obviously when placing an IC, you're looking for where price is not going. And so after the open, after we get some data running for our Vol M charts, our Vol D charts, and our Spec C charts, those are posted in the evenings on X. You can check those out. Then that gives us an opportunity to know where market participants are speculating. And as I said, once that starts to flatten out a little bit, then that gives us a better opportunity to place trades. So hopefully that helps. Okay. All right. Guess we can go ahead and jump right into it. Thanks everybody for joining us this morning. This is Michael coming to you from Game Edge on Wednesday, February 25th with our pre-market prep session. As always, we'll cover our three pillars: sentiment, structure, and trend, and individual equities at the end. We can go over our option structure of those individual equities. So we'll go ahead and jump right into the trend portion of our three pillars: the market trend model based on the tick index. The bolded white line is our intraday instantaneous cumulative tick. If it is rising, obviously there's more market participants buying than selling, and we want to be on the right side of the market. So that would be long the overall market. And then these three moving averages here are what we call or refer to as our railroad tracks or momentum moving averages. If we're above those and these are stacked in the proper order, then this is your 1 to 3 day trading time frame. This is your instantaneous intraday time frame. And then our longer look back period is our colored ribbon. And obviously if we're above our colored ribbon, then our mechanical portfolios, our wheel strategy, which is doing extremely well this year, as well as our P2P strategy, outperforming the SPX by a 6x, I think, at the moment. So doing extremely well there. So our mechanical portfolios are turned on, and you want to be long the overall market. All right, let's move on to our trading view. MTM obviously opened here around the 10 o'clock hour. We started recovering this ribbon, our ribbon here, and then we started recovering those short-term momentum railroad track moving averages very quickly. And then by 11 o'clock here on the tick US, which is a little bit more sensitive, we were already above those railroad tracks. So obviously that was an indication to get long the overall market. And then we continued to the upside, market participants buying more than selling. So again, we'll continue to watch this day over day. Obviously, if we're above those railroad tracks and momentum moving averages and we have a positive slope, we want to be long the overall market. All right, let's move on. The SPX, largest most notional value options complex. Again, SPXA, we separate the SPXA from the SPXP. SPXA is the institutional positioning. We'll be heading into the March OPEX, MOPEX there. And then the web app here, our interactive web app, if you hit the quartile button, this would give you the upper quartile on the SPXP. We'll move on to that. But this is our cruise ships and our tankers, the SPXA. Institutions basically drive the 40,000 foot view, the longer term positioning of the overall market. So we are call dominated above and below spot price. You can see the transition area that we talked about, the DEX transition, as well as the GEX transition. DEX transition, obviously, we're within that overall right now. Key areas to stay above 6,900. We've drawn this green box here. In the money calls supported below us. We do have those in the money puts overhead though, so it may make the move up towards 7,000 slightly more difficult, but you see 6,950 obviously would be the target first target above and the top of transition area where we look for some stalling and price interaction, and then possible some choppiness and pullback. But the SPXA is improved, looks good into the March OPEX so far. So any pullback should be supportive. And then we see speculation up towards that 7,000 level. All right, moving on to the SPXP. Again, we've aggregated the upper quartile here. So 74% of the total OI is contained within these expiries. And then we've aggregated the 3 days here heading into Friday. Again, you can read this, stop your player and read this commentary here. Main takeaway is we're opening above the transition of GEX and DEX. So that puts us in a more favorable structure for price appreciation. And then as long as we're holding above the transition, or at the very least 68.50 here, where we're going to anticipate that to be stabilizing on any pullback, you can see that positive charm level in the money calls below us should be supportive. And then we have call speculation to the upside. And then we really don't start seeing that area of negative charm start coming in. Really 68 or 69.20, 69.25 would be that first hurdle we need to get over. And then you see it drops away a little bit. And then we see 69.50 to the upside. So that'd be our first target to the upside. Yeah, absolutely. Hopefully that helps. And then we can go over in more detail some of our tools if you wish. But you can also check out our open mics on Sundays. We went over those tools extensively also. All right, so that's the takeaway for today. Call dominated, again, should be supportive on any pullbacks as long as we're above transition or at least 6,900. Even if we lose transition, we have those calls and a positive charm as long as we're above that 68.50. That should be stabilizing and supportive on a move to the downside. And then actually you see 7,000 to the upside there. PGEX and COI is within reach. If we take the 69.50 level, we have an opportunity to appreciate pretty rapidly. As you see, the net charm is really not a headwind if we take that 69.50 level. All right, moving on, the SPXP GEX ratio. I spoke about this yesterday. I'm going to zoom in here a little bit. That we saw the pullback within the market, but we actually saw a positive slope in the SPX GEX ratio. So that was actually a positive divergence. This was indicating, even though we're below the 1 level, that market participants were still speculating with out of the money calls, and then we're not driving to the downside significantly with that out of the money put speculation. Then with the rise yesterday, we actually saw us regain that 1 level. That's theoretical balance between calls and puts. So we're now call dominated. Excuse me. And we want to see that positive slope being maintained, indicating out of the money call speculation coming into the structure. And that's overriding the short dated put gamma or put speculation, again, leading to a anticipation of price appreciation to the upside as the GEX ratio is 1.23. So we want to watch this day over day. You can see back here when we had those significant moves to the upside, the GEX ratio was driving significantly higher, indicating out of the money call speculators were coming into the structure heavily, driving that speculation and spot price to the upside. All right, let's move on. The SPXP delta balance. Again, this has improved significantly from when we looked at it yesterday. I talked about the negative slope in the down here in the right-hand plane. Again, this is your out of the money calls and in the money puts overhead, as well as your delta balance. And then we talked about that where we were weak into the middle of the week, but then we have opportunity for towards the end of the week for improvement in the overall structure, sentiment, and possible price appreciations. And that's come to fruition. Our delta balance is now pegged at 1. Again, this is the option structure separated from above and below spot price. So the green dotted line is your right-hand plane above spot price. So again, that's with a slight negative slope heading into today, but we're above the 0 line now. We'd like to see that improve and move back to the upside. But our left-hand plane now is becoming entrenched within the money calls below us. So that will continue to be supportive on pullbacks unless this overall slope changes or the sentiment structure changes. Again, we'll see this heading into the end of the week, then heading into March 2nd. Obviously, next week is where we could see some overall weakness. That's in the left-hand plane, but the right-hand plane continues to stay above 0, indicating speculators are maintaining their overall positions for possible appreciation to the upside. And we see the delta balance staying above the 0.5 and then being pegged at +1 for multiple days. So again, that's still indicating that bulls are in control and speculators are anticipating and opening contracts at higher strikes. So overall structure improving, overall market trend model improving, overall delta balance improving, obviously, as we continue to watch this day over day, but market structure seems to be improving day over day. All right, moving on the SPXP net stack command. Again, high sensitivity levels for today. This was really vital yesterday. We spoke about those transition areas that if we got above, we were going to have the opportunity to move to the upside. Our game plan played out extremely well. So make sure you check our pre-market prep yesterday. I went over all of these areas of transition and what we were looking for and pullback that we were looking to be supportive. And then we got a quick move off of that, providing great opportunities to the upside. So today, 6,900 in the money calls below us. These should be supportive. You see that transition area at 68.62. So we'd have to move significantly lower for us to transition from in the money calls to out of the money puts. And then above us, 69.25. I've already spoke about that ledge that we need to get above for price appreciation up towards 69.50. And you see where we transition from out of the money calls to in the money puts. That's 68.79. Coincidentally, that will match our transition level on 0DT, which we'll go over here in just a minute. You see charm above us, 69.50. Again, I said that's where we would most likely anticipate that stalling, those out of the money calls, as long as we're below that. And then 6,900 out of the money puts. These should be supportive on any pullback. And then our key sensitivity for gamma levels. And then our Vanna, we have a significant Vanna tailwind if we can get above 69.50 and we see out of the money calls come in and we see volatility drop. You see this is almost 1.2, 1.5 to 1 on the Vanna, which would be the opportunity tailwind for us to move to the upside. And you see where those transition areas are at. All right, let's move on. The SPXP 0DT as well as our trading plan for today, call dominated. You see the drunken sailor range are finally our GEX and DEX transitions are narrow. This provides an unambiguous if-then scenario that if we're above, we want to be long on any pullback to the transition area. If we're below, slightly cautionary, you could be short down towards 68.50, but significantly call dominated. So again, probably not get that large move to the downside again, unless we see volatility spike again, sentiment and structure change, and we'd have to see via our volume command out of the money puts being opened rapidly, both of those centroids moving to the downside, which we're not really anticipating for today. As the aggregate over the next 3 days, the structure seems to be improving and stabilizing. Again, above 69.25, you see that we actually have charm up towards 69.50. So we're going to have to see out of the money calls come in above 69.25 to drive us up towards 69.50. And then if we overtake 69.50, we have the Vanna tailwind kicking in. Not a significant amount of charm overhead, and we could easily drive up towards 7,000. Obviously, that would be a stretch, but that could happen if we get above that 69.50 level. But you see that large negative charm sitting there at 69.50. So that's going to be difficult to overcome, probably where we would hit up to and then start to see some stalling and balancing, and then a possible pullback down towards 69.25. So again, that's the areas and key levels we'll be watching for today. We'll see how it plays out from the open. And then that will be as well watching the market trend model to see if it continues to improve and move to the upside, indicating more market participants are buying versus selling. All right, make sure you check out our new website. We just rolled it out, GameEdge.com. So we're transitioning from GameEdge.us to GameEdge.com. GameEdge.us is still live, and that will link to all of the GameEdge.com. But just an updated website with all of our content, significant areas that we're improving. Again, resources, all of our free courses, our blog, our newsletter. Make sure you sign up for that. That is free and it'll be delivered beyond the bell on the weekends. So make sure you check all of that out, as well as our pricing tab. Come into our Discord, 14-day free trial, all the tools turned on. Yes, we have a money back guarantee. If you can prove that you went through all of the education materials and you did not get a trade and you followed all of our tools and our trading philosophies, then we'd be happy to discuss with you about refunding your money for the month. Again, great trading community, traders from all backgrounds, all walks of life, extensive experience that will help and will get you up to speed on individual equities or 0DTE or whatever you want to trade. All right, let's go ahead and jump right into some individual equities now. I see some people posting. So let's look at Tesla. We'll start with Friday's expiry. Call dominated, almost pushing above transition area now. We just spoke about that yesterday. 420 to the upside looks like that first stalling area that I'd look for some monetization, probably stalling into Friday. Let's go to the upper quartile. Again, call dominated, pullback should be supportive. 400 pullback to there should be supportive. 420 here continues to be that upside area that I'd look for some stalling first. And then you see a little bit of a headwind above 420. You'd like to see the structure continue to advance, and actually does after the Friday expiry to the next Friday expiry. You actually see the structure advance up to 450, but that 430 looks like there's in the money puts there. That will be difficult to, so those significant amount of puts there. that'd probably be difficult to overcome. But once you could watch those through our web app, through individual expiries to see when they expire, or get monetized. But 450 PGEX COI to the upside looks good on Tesla. So everything looks good on Tesla. Let's move on to Netflix. Netflix, let's look at the Friday expiry. So call dominated on Netflix, you're actually above transition, so 80 to the upside. I'm going to say that's probably the cap on price for this week. And stalling, let's look at next week. Next week, 80 structure doesn't really advance much, so not anticipating much upside. And then on the quartile, upper quartile, taking into account 64% of the total, I actually still put dominated and well below transition. So shorter term expiries are improving. Longer term upper quartile expiries are still a little bit negative on Netflix. So 80 looks like the cap on price on Netflix. Not seeing a significant move to the upside on Netflix anytime soon. Not sure when their earnings are either, or if they already had earnings. I'd have to check that. SanDisk, put dominated. You're within the overall transition. Structure does not look great. You actually have PGEX up at 700 though. Let's look at next Friday's expiry. 640, well within transition. You see the overall structure just fairly messy with in the money puts overhead at 650. That's probably going to be difficult to get above. 640, 250. If you capture that, I'd look for a move up towards 650. Upper quartile, put dominated within transition, probably going to be choppy. So just not one of the ones that I would extremely look at and go to. Lots of other stocks are looking better. Apple, Tesla, NVIDIA, Amazon, obviously. I know NVIDIA has earnings though. So SLV, I'm in this in my wheel strategy. Call dominated above below spot price. We're pushing above the 80 level now. Everything looks good. 86.50. My only concern is INGEX is actually above PGEX. So I'd like to see this flip. We do see upside speculation though, and we're call dominated. So supportive on pullbacks now. So if you're in the wheel strategy, obviously selling below these levels could be advantageous. And then next expiry, we actually see the structure advance up towards 86, even though INGEX is still at 88.50. So I'd like to see this again flip and INGEX drop below spot price. But silver improving significantly from that pullback, and looks like we're seeing speculation start to come in, even though we have some in the money puts overhead. GLD. GLD, let's look at this Friday's expiry. Call dominated, you're above transition. INGEX, PGEX at 475, or actually at 477. 485 to the upside, we could see that. Just not seeing a lot of speculation there. Pullback should be supportive. Next Friday's expiry, 480. So I'd say that'd be a cap on price, most likely. And then upper quartile, 485. So you see that. So 480, 485 on GLD. So we still have a little bit of room to the upside. Google, let's check out Google. Let's look at this Friday's expiry. Call dominated, you're above spot or above transition, so that looks good, but a significant charm headwind there from those out of the money calls above you. 317.50, I'd say that'd be the upper push on spot price. 325, structure improves a little bit, but you see the transition actually widens. So it's going to be choppy move up towards 320. So Google probably going to have a difficult move to the upside. Upper quartile, above transition looks good. 350 to the upside. If you're positioning for on out in time, Google looks good for move to the upside. May just be a little bit slower. Reddit, I haven't looked at Reddit for a long time. Okay, you're within transition. You're call dominated. You're above 142. I'd anticipate that to be supportive, even though those are puts below you. Out of the money put speculation there. 147 to the upside. 145 your first hurdle. So those are the areas I'd be watching. March expiry, Friday expiry, you're within transition. 145, and then structure actually advances to 150. So that looks good. Structure advances significantly on the further out expiries though, up towards 220. So Reddit's starting to improve there. I'd like to see it. It's a little bit messy at the moment. I'd like to see it get a little bit more defined. That would be good. But Reddit looks okay. AI, put dominated, below transition, lower OI. Not a name I would be looking at. Yeah, not a name that would adhere to the dealer metrics significantly though, but you can see 11 to the upside and you're at transition. So it doesn't look that great to me. BABA. Friday's expiry, put dominated, in transition, doesn't look good. We're looking at BABA right now, Shah. Next Friday's expiry, call dominated, at transition, 160 to the upside, 150 to the downside, upper quartile. 170, structure improves, but significantly put dominated overhead. So it's going to be difficult for BABA for price appreciation. And Amazon, yeah, absolutely crush Q. Appreciate it. Let's look at Friday. Call dominated, above transition. Amazon looks good. 215 to the upside. So where I'd see some stalling. Obviously negative charm in there. Those are out of the money calls. Next Friday, same 220. Call dominated. 220 to the upside. Looks like the cap there. 215. Structure call dominated. Everything looks good. It's just we do have significant upside speculation come in though. So COI is up at 250. So everything looks good on Amazon. Man, you guys are overloading today. Holy cow. MSTR, above transition, call dominated, looks good. 137 to the upside, looks good on MSTR. Improving. Next Friday's expiry is put dominated though, but what structure is up towards 140. Everything looks good there. So speculation starting to come back into MSTR. Call dominated, 130, spot price right at it. You need to see that structure advance up towards 140, but you do have speculation to the upside. So stalling 135, 137. So structure looks good on MSTR. It's improving. Coin, let's see. Friday, call dominated, above transition, headwind there, 175, 177.50. See if structure advances. Structure actually drops there. So call dominated, supportive, above transition, but your structure and speculation actually drop into March. Friday expiry there, 3.6. Above transition, call dominated, 177.50. That's probably going to be the cap on price on your headwind for headwind. Oops, dang it. Sorry, messed up. QQQs. Let's go this Friday. Call dominated. You're within transition. Looks pretty choppy. In the money puts overhead. 616, 621 overhead. Probably going to be difficult. 605 on a pullback. Next Friday's expiry. Put dominated still. You see this mess though. Puts here, and then surrounded by a little bit of call speculation. Put dominated on the extended expiry. You're within transition. Choppy. 620 to the upside and 600 to the downside on that. PLTR. I haven't looked at PLTR lately. Let's look at that one. Friday's expiry, call dominated. You're within transition. In the money puts overhead, 135, 136. Probably going to be difficult to get over. You have short-term calls right around spot price though. So those could appreciate up towards that 135, 136. You see 139 to the upside, PGEX and COI. Let's see if structure advances. Structure advances to 140. You still have though puts here. And so it's going to be a choppy mess to get to that upside to 140. We are transitioning to call dominated though. So supportive that you have puts below though. So we're within transition. Let's see what the upper quartile is. Transition, put dominated though. So the full quartile has not transitioned to call dominated yet. So heavily put dominated above and still put speculation to the downside. So short term, right around spot price, you're seeing some speculators with overhead 135, 136. So that helped, Perry. All right, let's go look at trading view real quick. Looks like we're holding into the open here. So 610 on Qs, 690, 691 on SPY are going to be key levels to stay above or get above, and then 264 on IWM. So, all right, thanks everybody for joining us. Wow, we went over a lot of content. Appreciate it. Again, gameedge.com. Check us out. Like and subscribe on X and YouTube. You'll be notified when we go live. Please share our content. That helps us. It helps us extend our reach to the trading community, as well as our education. And that's what we would like to help everybody with is education as well as become profitable traders. So come join us. We'd be happy to help you get on your journey to profitable trading. And as always, manage risk and make it a great day. We'll see you. Thanks.